I'm Shahabit. Today we are starting with the basics of accounting. Accounting is often called the language of business because it helps businesses track their money and make smart decisions. In this lesson, we learn what accounting is, who uses it, and how it works. Let's begin. So, what is accounting? Accounting is the process of recording, summarizing, and reporting a business financial activities. It helps important questions like how much money did we make, how much do we owe, and what can we afford to spend. Accounting information a means to an end. Accounting information is essential for effective business management and decision making. It helps us to provide a framework for understanding financial performance, assessing risk, and making informed choice about resource allocation. By providing a comprehensive view of a company's financial position, accounting information empowers stakeholders to make sound decisions that drive growth and profitability. Accounting from a user's perspective. So firstly we will talk about managers, then investors, and then employees. Managers basically use accounting information to make operational decisions, monitor performance, and allocate resources effectively. And investors use accounting information to assess a company's profitability, financial health, and growth potential before making investment decisions. And employees use accounting information to understand their compensation, benefits, and financial performance of their employees. Then I'm going to discuss about types of accounting information, and we have three types of accounting information. So the first one is financial statements, in which that provide a snapshot of company's financial position, performance, and cash flow. Budgets. In budgets outlines a company's planned financial activity for a specific period, serving as a guide for resource allocation. And in performance reports, compare actual financial performance to planned or budget results, highlighting area that require attention. An accounting system. An accounting system consists of the personal procedures, technology, and records used by an organization to develop accounting information and to communicate this information to decision makers. Then we will talk about the database that stores and manage all the financial data, process that captures, process and summarize accounting data, and reports that generate financial statement, budgets and other accounting reports. Determining information needs like that provides companies financial information about like profitability, financial positions and cash flows that helps in decision supported activities like strategic goals where the company's long like what are the company's long term objectives and what is information is required for day to day operations and what specific information is needed to make informed decisions. The cost of producing accounting information. Accounting system must be cost effective. That is, the value of information produced should exceed the cost of producing it. Management has no choice but to produce types of accounting reports required by law or contract. In other cases, however, management may use cost effectiveness as a criteria for deciding whether or not to produce certain information like labor costs, salaries of accountants, bookkeepers, and other accounting professionals, system cost, hardware, software, and maintenance costs for accounting system. Basic functions of an accounting system. So the first one is about interpret and record the effect of business transactions. then classify the effect of similar transactions in a manner that permit determination of various total and subtotal useful to management and used in accounting reports. Last but not the least is about summarizing and communicating the information contained in the system to decision makers. Now we will talk about like who basically design and install accounting system. Accounting system is designed by consultants and in-house IT teams. Consultants that provide specialized expertise in accounting software and system implementation, and in-house IT teams may have the expertise to design and install accounting system, especially for large companies. Now I'm going to discuss about the component of internal control. Component of internal control is a process designed to provide reasonable assurance that the organization produces reliable financial reports, complies with applicable laws and regulations, and uh, that conducts its operation in an efficient and effective environment. And it's basically talk about like segregation of duties, that separating incompatible tasks to prevent fraud and errors, and authorizations requiring approval for transactions to ensure legitimacy. And then in last, they basically talk about the documentations, maintaining records of all the financial transactions for accountability and audit trails. Now I'm going to like discuss about financial accounting information. Financial statements are basically the formal records of the financial activities and position of a business person or other entity. Financial statements basically have three types. So the first one is an income statement that reports the company's revenue, expense, net income, or loss over a specific period of time, and the balance sheet that reports the company assets, liabilities, and equity, shareholders' equity, a specific point in time, and statement of cash flow basically tracks the movement of cash in and out of the company over a period of time, outflow from like operating, investing, and financing activities.